Welcome to another episode of Builders, Budgets, and Beers. Today we are joined with a repeat guest, Shayne Glass from Shrock. And I'm going to say Shrock because it's not just Shrock Premier, it's not Shrock Development, Real Estate, Excavation, Rental. It's a conglomerate of businesses. This is an episode for listeners to really understand what are the important nuances of tracking cost and just general project financials across multiple entities. It's a very common practice in construction to have a custom side, a remodel side, a services side, an excavation side. And Shayne does a really good job at explaining the importance of it, how to do it well, because they've got something special going on over at Shrock. Go ahead and tune in. Let's get going. All right, we're live. Everybody, we have Shayne Glass with Shrock Development back for round two. Shayne, how's it going?
Hey, glad to be back. We had so much fun the first time. We had to come back for round two.
That's right. That's right. Conversation is easy with us. Definitely appreciate you you coming back on the show, Shayne. I think today what I'm going to be most interested in digging in on is just start with like a little bit of background on Shrock, and let's focus on mainly like the multi entity business structure that you have and what it really takes to track cost and how you guys view that across your business. So if you could just start, like, give the listeners a little bit of an understanding of how you guys have structured Shrock and what's all included.
Sure. So yeah, I'll try not to get too into the weeds on the history of Shrock, but we do have a fun, interesting history. So Joseph Shrock, our owner, would have started. His dad would have started what was known as Shrock Construction, which
Mm-hmm.
would be I would describe it as a pretty typical Amish-owned construction company. So
Okay.
they would have done a little bit of everything. They would have done some residential stuff. They would have put on decks. They would have done some roofs. They would have done just your more traditional construction, residential construction.
Mm-hmm.
Joseph then took over from his dad, and I don't remember the exact year, but I think it was like 1986 or 87, somewhere around there, where he got more involved and kind of started to lead Schrock. And he went into commercial construction. He did a lot of framing and different things. But really, where Schrock started to take off was when he started to focus on areas, really hard areas of construction. So areas that other contractors really don't want to mess with. So complicated things. And it really didn't matter what it was just hard. It was hard enough that other people didn't want to touch it. That's
He
kind of how it
sought the
started.
challenge. He
Yeah,
looked for the challenge.
it was the challenge of it, but it was also the ability to create separation because in business, a lot of companies, most companies take the path of least resistance. So for him, he saw it as opportunity where a lot of other owners might have seen the risk would have been a little too much. And that's actually how he got into the high-end residential construction because it was hard. You know, we're doing multi-million dollar houses that not everybody can do. So that's really how Shrock went from Shrock Construction to Shrock Premier Custom Construction. So then, really, the rest of our entities, because we probably have 10 to 12 entities at this point when you talk about multi-entity reporting and accounting. But that was the start of it. So Shrock Premier to this day is kind of the primary, or I don't know if primary is the right word. It's not like it's more important than the other entities, but it's sort of the overarching reputation, brand, image is Shrock Premier Custom Construction.
Sure.
And so then what's happened is over the years, needs or opportunity has arisen. So, Joseph was one day framing a hotel and he had a guy, I don't remember the name of the guy, but he's told me the story. This guy that was almost like a Western, I think he was from out West. He has his cowboy hat and stuff.
Sure.
And he tries talking Joseph into doing steel fabrication on a structure that he was doing a hotel for. And it was in Columbus, I think. Columbus, Ohio. He might correct me on that, but I'm pretty sure it was Columbus, Ohio. And it's a Marriott. Anyway, so Joseph says, well, I don't do steel. And the guy answers and says, well, you do now. And so then Joseph kind of saw it as a challenge.
Sure.
And that was the start of then the second entity, which is Shrock Prefab. So it started out where he was just on the job site, building steel studs, putting them together, building wall panels, and installing them. And now we have 367,000 square foot facility where prefab has probably 30%, a third of that square footage where
How
they're
big?
doing 367,000 square feet.
Wait,
It's a
wait,
large
wait.
facility, and that's actually
So
not our largest facility, but that's one of them.
okay, so you've got 367,000 square feet for just your steel fabrication.
Not just. They have about a little over a third of that, I think, by square footage. But we have other stuff going on. So our excavation's in there. Really, when Joseph bought that building, and I don't want to get ahead of it, but that's another entity then. Everybody kind of thought he was crazy because it's an old bus manufacturing facility in Loudonville that was probably going to get tore down at some point. And he comes in, buys this building, and we have it at full capacity at this point. So we've got that facility fully yeah, there's really no space. We could create some space, but it's fully leased out or used by us.
Okay, so let's just start doing some counting here. So I'm counting 3 or 4
That's three.
entities that we've
Yep.
talked about.
Yep.
And over what timeline did this progression happen?
Yeah. So the growth has really happened. The entity growth. I think prefab was like early mid 2006 or something, and then rain. This is before I was here. Shrock Restoration, then, which is our restoration entity that's a franchise of Rainbow International. Well, it's now just Rainbow Restoration. They're a national brand that does, they're a franchise. So kind of like McDonald's is a franchise, but they
Sure.
are for the restoration industry. And so then he started that in '09, and that was because he had a high end customer that didn't trust any other restoration company to come to their house because he built their house and they didn't want subpar work done. So they're like, Joseph, we really would like to have you out here. And he's like, well, I don't do insurance work. Well, next thing you know, he's doing insurance work, and we start a restoration entity, and now we have 8 counties that we have exclusivity to. So he's yeah. So then, boom, there's entity number 3. But and I could go on and on with our entities, but we have this growth that's happening, and we have shared commonality of resources. So when I came on board at Schrock, his very direct point was he wanted each company to independently stand on its own, not Premier carrying it financially back and forth, whether it's credit
Sure.
accounts or banking or whatever it is. We want to share the resources, but we want the accounting and financial tracking, job costing, all that stuff to be independent of one another. So you can run independent financial statements on any of the entities at any point in time, and that is Shrock Prefab, that is Shrock Premier, that is Shrock Restoration, and they're not commingled in between. They're not messy.
Timeout. Is that considered vertical integration? Meaning
I
like
would
you guys
no, that'd be like
go
horizontal.
ahead.
Vertical, I think, would be like you're taking over something in a supply chain. Unless I'm misunderstanding the term, I'd have to look it up. But I think vertical in my mind would be like you're taking over a piece of a supply chain that is then
You're
you're
right.
controlling that vertically. For us, it'd be more horizontal, I would say, in our structure. But yeah, we've done a lot of stuff that, for example, cash flow management. That's one of the big things I changed here because we had we had too much concern between the companies, and that's the problem when you're an owner of multiple companies because it's like you there's this thing of fair, like what is fair or equitable between the entities with respect to the owner's time, resources, all that stuff.
Sure.
So then what we started, and cash is part of that. So you have company A that has a whole bunch of cash on hand, and you have company C that's going into a line of credit. That doesn't make any sense at all when
Sure.
it's one guy's. So the way I explain it, or actually it was explained to me, and I explained it to Joseph, is you're moving money from one pocket to another pocket, right? So for
Right.
us, we created a way of handling cash flow with a holding company where everything flows up, and we can control cash flow across all the entities very seamlessly, easily, at whenever and however it's needed. So that's been awesome. But yeah, so there's a lot of history there. We have a market that doesn't really fit in construction that started in 2015, I think. That Flexi Holdings is what owns the facility where prefab's at. So we have all this stuff going on, but it's important to maintain quality, um, auditable records that an outside accounting firm or someone that needs to look at the numbers can look at them in a way that, yep, this makes sense, it's accurate. So we can look at a consolidated financial statement and understand that this is telling the full picture of Shrock, but we can also drill into each entity independently and know what makes up the whole, divide it in
Yes.
and divide it out. So for us, we have three entities that we have independently reviewed financial statements for, and a variable interest entity, which is Flexi Holdings, because they have the space that two of the companies, well, actually, all three of the companies are in. So then, yeah, so we've got it figured out now. It took a little bit, and
Yes.
when I came here, we had payroll with different people back and forth between, and but it's important while and this was something Joseph and I talked about early on, even though the maintaining independence is important financially, it's equally, or actually it's probably more important to not let that get in the way of sharing resources. So if we have company B slow, company A can send guys over there, or girls, whoever's doing work wherever, and they're just filling in. And all of a sudden they're on the same payroll, but we have ways of tracking intercompany transactions and making sure the job costing's handled the way it needs to be. So Joseph's never laid anybody off in construction. That's unheard of, even through the '09.
Dang.
He's never laid anyone off ever. And that's because we can share resources between all the entities, with different types. It might not be exactly what they want to do, but it's usually short term, a week or two, and it gets them work, and works out really well.
Beautiful. Okay, so I'm going to take a step back, like all the way to the beginning of
Yep.
separation from the competition being like how you win in business, or at least how you get into these other opportunities, right?
Right.
And it sounds like Joseph was just provided quality work, right? Built a reputation, a brand of being quality. Opportunity showed up. He greeted the challenge with execution, and he saw it as an opportunity to grow his business with that separation. Now, you're talking a lot about, and I see separation being a key word here, because separation from competition being the opportunity, but also like separation of business or cost
Mm-hmm.
being a concept as well. So tell me a little about how you guys do stay on top of like managing all of this cost back and forth and separating. To your point, I have resources in company A working at company B, and I've got material that's coming in that needs allocated to this, and all of the above. How do you guys manage that separation?
Yeah. So I wouldn't be telling the truth if I said it was easy. But you really we have to have certain people in certain positions that know enough about what's going on between the entities that you can understand what needs to go where and how. And it's all over the place. So this is not, even though, so like everything about what we do is hard. And I'm not saying that as a bragging point, but like when you get into multi-entity, um, not just the reporting, but the running of multiple entities is hard. One entity is hard enough. So you run into stuff like, when I personally do all the intercompany labor between all the entities. So what that means is I'm relying on notes in our time tracking. I'm relying on little clues of what I know is going on, which I'm not heavily involved in each entity to know exactly what's going on, but I know enough that I can direct labor mostly where it needs to go, or inquire with the manager in one of the companies companies to say, hey, what was this for? But you have stuff like prefab, they have their own welders doing fabrication repair on an excavation bucket in Shrock Premier because we do excavation. So then we need to make sure that that labor, prefab should not be eating the labor, right? So Premier needs to pay prefab for that. So we then reimburse prefab for that labor, make sure the labor is tracked appropriately in Premier, not only within the Premier entity, but to that specific piece of equipment or bucket. So there's a lot of there's a lot of that type of stuff where it's kind of taken it to the level of detail where it's not only get it into the right company, but it's get it in the right company and what was it? Like, is it
Right.
direct labor? Is it indirect labor? Was it repair for something? Most commonly, like here's another complicated one. So we have truck drivers that are driving, hauling for both of our entities, but Premier owns dump trucks, Prefab owns a couple semis, Premier driver hauls for Prefab. Well, we got to figure out ways to handle the labor back and forth. And then who pays for what with repairs? Well, it's Prefab's truck, so they should pay for the repairs. So there's a lot of back and forth that is is complicated, and you have to have a team that can handle it. So and you got to have a clear tracking, clear reporting. And one of the things Adaptive has done for me is when I'm looking at, I have visibility, so I can see. And we don't have this running in prefab or Rainbow yet at this point. Uh, I'd like to, but it's these types of things take a
Right.
lot of involvement with different people. But it allows me to look without getting a hold of our lady up front. Hey, can you pull this invoice and send it, scan it to me, or share it to me, or whatever? All I have to do is see a transaction with a detail that says, um, if I use the example for the bucket repair, maybe it's a piece of steel from wherever that we ordered, and I want to look at that invoice to say, was that for sure for this? Because within the company A maybe doesn't give as much detail as you normally have in those types of transactions, because they ordered on company B's charge account or whatever. So there's a lot of
Sure.
that stuff, and especially early on when you're starting companies and all of a sudden prefab exists, Rainbow exists. Well, some of the big suppliers don't. They know Shrock, and they want Shrock to be responsible for their credit, which is understandable because Shrock Premier has the history and all that stuff. So now all three companies are strong enough that it's a moot point. But when you're starting a new entity, it's hard to get something like credit, you know? And so you have to
Totally.
have sometimes shared charge accounts. And then it's like, oh, Rainbow's using Premier's lumber, supplier for their projects. And then you got to track that stuff separate.
So you had mentioned that Adaptive helps you with, and correct me if I'm wrong, but largely like A, with the organization, but B, just like the streamlining of communication or the accessibility of that documentation to know
Right.
what's allocated to what in this
Yeah.
huge like cluster of businesses that are all commingled and interacting and working together.
Yeah. I'll give you a simple example we just talked about yesterday in our meeting was we do a lot of stuff that would be very employee friendly. That's super. I don't know how common it is, but probably not super common for companies our size. But one example would be, let's say you decided you have a home project, Reece, that you're doing, and
Mm-hmm.
you decide, well, I'd love to order the material through Shrock's account because it's going to save me 15% on all the material. And we're like, okay, people don't really have to ask it. I mean, we want to know that it's going on, but it's generally fine as long as
Sure.
we know what's happening. But then we have to make sure it gets billed to them, right? So
Mm-hmm.
at cost, we pass that all on at cost, but there's times where we just missed it. We thought that something got billed to so and so, and it went on a charge account, and nobody marked it billable. And the employees calling in saying, "Hey, I should be getting an invoice for this. And so I'm admitting our mistakes right now, in this
Sure.
podcast, but that's one example. So the way
Well,
adaptive helps with that is I can I'm like, okay, guys, here, team, let's say because we have one person responsible for the invoice entry process. We have another person responsible for the employee billing process at so and so in adaptive with a comment. Should, make sure, can you make sure this gets billed? It's marked billable. Let's make sure this goes out because oftentimes, like we have our own shop, and let's say,
mhm.
Reece, again, you have a truck problem, your truck broke down. Hey, Joseph, or hey, Andy, our shop manager, can I get my truck fixed here? We'll do that. Like we'll do it. It's not going to be priority above our other stuff, but take it into the shop. So then we have labor, we have material, parts, whatever, all on charge accounts. All that stuff has to be processed in a way that makes sense when the invoice it goes out to the employee. That yep, that makes sense. I had to get my truck fixed or an oil change, whatever it was, and here's all the detail. Well, in adaptive, I can very easily first I can see it visibly, and we can at people to where, hey, so and so, hey, so and so, is this for this person? If it's unclear because there's nothing in the PO line or whatever, and the
Mhm.
shop manager, we say, hey, at Andy, is this something that you're working on for so and so, whatever, and then
Right.
at that point, we're making sure we're all on the same page versus an invoice sitting in a file somewhere or sitting in an approval bucket somewhere that I don't know anything about. He might see it, but there's a delay in timing and there's a delay in awareness. So because then the person doing the employee billing maybe doesn't doesn't find out about it. One, it's a delayed process, but also do they know it's got these six other things that should go with it before it gets billed? You
Right.
know?
Well, and I think okay, so like, hey, like just again, like the very clear communication, but like if you didn't have adaptive or you weren't able to communicate and have your checks and balances and your control mechanisms that are built into the process and the product, like what was the outcome before adaptive? Like what who cares if it's sitting in a PO bucket? Right? Who
Yeah,
cares if this stuff gets missed? Like what does that actually mean from a business standpoint?
yeah. So what we would have been doing is use something like Teams or email to either scan the because we've been pushing to be paperless with adaptive because it just makes sense.
Sure.
Everything's
Mhm.
automatically flowing into the software. Prior to that, we knew that we probably ought to be going a little bit paperless, but we weren't pushing it hard because we're still doing the checks for the most part, and it we just didn't have a push. We didn't have the right push. So it would have been like, oh, go pull this out of the AP file for such and such vendor, and can you send it to me? And then I'm looking at it,
Right.
but that's one person, right? If I use that shop example again, Andy's the approver of the invoice where the parts are coming from, and he can then be communicated with from our billing person to say, are there other items I need to look out for coming through before we invoice this? Is there labor coming? Whatever that communication channel is there for whoever that needs to be involved with it to see it, and which is good and adaptive. As long as
Totally.
the PO is on there, they're pulling that information and reading it through the software to where it's already going to the right place. It's kind of taking some of the
Totally.
guesswork out.
Of course. Okay, so like it just like broadly like cuts down the time it takes to get this information. It cuts down like the minutes of going to the file and doing this. But you had
Mm-hmm.
mentioned earlier, and correct me if I'm wrong or I picked up on this wrong, but it sounds like there was like a discount, like a 15% discount involved. Like is accurate cost missed in those processes with the delayed and manual communication?
So what I meant by that was like we'll get contractor pricing on say our lumber
Of course.
supplier. So like if someone retail went to go buy lumber from a lumber supplier, they're going to pay a lot more than a contractor that does the volume
Of
that we
course.
do in a year. So the invoice is already going to have the discounted pricing on it. We just have to
Got it.
do the appropriate processing after that to make sure the employee actually gets billed for to reimburse the company basically. So the part where Adaptive helps there is one, it's got the check mark for billable. So in there you have the software, check it billable at so
Mhm.
and so that handles that. They're aware of it happening. We marked it as billable, and then we can then pull that into an invoice for people that use whether it's QuickBooks Online or a desktop or whatever. That billable is pretty similar for a lot of softwares. You're pulling that into an invoice then that can get passed on to the customer or to the employee. But if you're a time and material contractor, which a lot of smaller contractors are, and some bigger ones, they are going to use that extensively because they're going to need to make sure that everything that is coming through is appropriately billed out to customers, or they're eating cost. So for us, we're fixed price contractors for the most part, 90, probably 5 or 98% of what we do. So we need the cost going to the right place, but we're not necessarily um, billing off of that cost, if that makes sense.
Totally. Well, and I think so that's like that was going to be my next piece is like if you don't have the checks and balances that are in place to catch those, again, we'll just use the discounts as the example, or it's not marked as billable. Like,
Right.
what's the outcome of that? With you guys being fixed price builders, though, and this is one thing that like we hear broadly in the market, is like a fixed price builder. The name of that game is it's a race to margin, right? It's like we're like you could have escalation clauses, you're running change orders, right, to insulate yourself. But broadly, like you're building a $2 million home, and that's with pre-con and bidding and contracts, like that's what's getting signed off with the customer. You have to know your costs in real time.
Oh yeah.
And the important part of that is like it might not be as obnoxious of like immediately we see that we're bleeding into margin, but it's more so of seeing what's happening with that job to even forecast what do we have to do for the remainder of this project to make sure that we're hitting the margin that we need to.
Right. Yeah.
So like go ahead.
So we're like a system like Adaptive would be really useful. Is so obviously the AP automation, but when you start talking about job costing, it is making sure. And I saw actually in the most recent update some of the purchase order stuff, but it's making sure that whatever cost code system you are implementing or have implemented is utilized effectively to the point where you're figuring it with the appropriate cost codes consistently when the invoices are coming through credit cards or whatever it is, wherever your cost is coming from, labor, that is then tracking appropriately to those the same way it was figured, however it was figured. And Adaptive will help with that because it's got things set up now where it knows, okay, we didn't have this cost code when it was figured. All of a sudden, real expense comes through, it's put to wrong cost code. Adaptive says that cost code is not on the budget. It's like, oh,
Yep.
oops, we messed up. Or we had a PO with a line item and we have a variance or whatever, especially as you become more formal in your processes as a larger general contractor, you have to have that stuff right. It's really not optional because the success of your company depends on it. You have to know where and how you're making money. Now, the question is,
Totally.
and we struggle with it right now, is to what end? Because it's really nice to look at an estimate and have a whole bunch of cost codes broke out a certain way that looks really pretty and really nice from an estimation standpoint. Real tracking is a different thing. So I'll give an example: gravel. We have gravel on in our excavation projects all the time. Well, where was the gravel used? How was it used? Was it used in the foundation? Was it the driveway base? Like, how was it used? So those are things where it's like, well, how much do you need to know? Because you can go overboard real easy with cost codes
Mm-hmm.
also. So striking the balance for where you're at, and obviously, I think if you're newer to cost code tracking, you should start with more simple, basic buckets because you want to fail small, not large.
Mm-hmm.
And if you have, it's
Mm-hmm.
a lot harder to fail with broader array of buckets, or cost codes, however you want to look at them. And it's not
Mm-hmm.
even as much how you do it as the consistency of how you're doing it. And then as
Yep.
you get better at it, you can start to break things out a little more. It's like, okay, we're pretty good at this now. We know what we're doing. I really need to know X, Y, or Z because it's helpful to me as a project manager to know and understand. And then all of a sudden you add a new cost code, you have the estimator aware of it, you have it put onto a budget, and it's built into adaptive that way. And then all of a sudden
Mm-hmm.
you can live, real time look at that budget analysis and understand where, oh, I should have had, the HVAC guy should have been there already. I know I saw that, and then you find out, oh, it's in the wrong place, or things
Yep.
like that can happen. So, but yeah, it's harder to do with adaptive because it knows what historically a certain subcontractor, material supplier is has been used in the past. So if we have an HVAC guy, it should be going to HVAC cost code, and it shouldn't be going to
Right.
plumbing. And if it is going to plumbing, well, it's going to flag that and it's going to say, well, you don't normally pick this cost
Right. Totally. Well, and again, like even just to go back to the beginning is like, yes, like the found, and you touched on this in our last podcast was like being, I think you made the comment on our last podcast was it doesn't even matter if your cost codes are right as long as you're
code. Right.
consistent. Right. So, but then it's like, okay, well, the importance here is like whether you're a builder listening to this and you've got multiple entities and you're operating, or you're a smaller builder that like sees the upside and the potential of having multiple entities, it always comes back to cost, fixed price, cost plus, knowing where it is,
Yeah.
and then getting that muscle built, whether you're leveraging a product like adaptive or just really strong brute force controls in a business. Now take that times 10 entities,
Right.
right? Only making it that much more important to know I have gravel. Is this for footings, foundation,
Right.
driveway, whatever,
Right.
right?
Yeah, and it's a struggle because for us, our companies are different in what they're doing, but they're also different in where they're at with respect to need for cost tracking. So we have some of our most profitable projects run through prefab, and they have cost codes in place. They're not super detailed, but they're good enough that we can tell where and how we maybe did good, didn't do well. We can recognize over time gain and fade in certain areas or cost buckets, and so then they're effective, and then we have
Right.
Premiere to the point where we need more detail. But it's hard because everything's a sacrifice. So you're always paying. It seems like there's a trade off with paying for information because um, let's say labor, for example. So we go back to the gravel example. Well, now I have, depending on how detailed my cost codes are, I have employee one, we'll just say, that's out there helping put the gravel into the foundation. And then he's also over there running the equipment, leveling out for the driveway. It's like, do we
Right.
expect him then to just stop what you're doing, change your cost code, and now you're on driveway labor? And yes, like some places will, like that's a thing, or they're big enough on a large commercial project that the driveway is so huge that that's a multi-week thing. When you're talking about
Right.
commercial excavation, it'd be probably parking lot versus driveway. But um, yeah, there's always a trade-off, but the tools, you have to make sure you have the tools in place to do it. So, and that's where I feel pretty comfortable at this point. We have a good enough system flowing through for adaptive that's kind of taking the guesswork out of it. There's still
Mm-hmm.
problems. There's still things we have to work on. Especially we're an Amish-owned company, so we have a lot of handwritten stuff and how well it
Totally.
reads something or whatever. But it's
Totally.
definitely a step in the right direction for sure.
Totally. Totally. I think like question here is like, are you better off with adaptive or are you worse off with adaptive?
Oh yeah, there's no question we're better off with it, and I'm pretty convinced whether it's construction or not. I don't know how many non-construction people will listen or watch this, but it's in my opinion, it's actually easier to implement. Like we have a market, for example, that has nothing to do with construction, and we haven't implemented there, and it's really easier because you don't really have job costing. It's more a
Right.
matter of recognizing the appropriate GL code where it needs to go. It really it's just minus the job costing, so it's kind of easier because there's a little less guesswork, and it's just been easy to implement there. And we've done it in our development. We've done it in our real estate holding companies. We have one that's mostly doing Airbnb short-term rental stuff, VRBO, Airbnb, some long-term rental, but we have it implemented there. We have Mansfield Plumbing. I don't know if you've heard of them or not, but they're one of the
No.
largest producers of toilets and urinals and all that kind of stuff.
Okay.
Mansfield
Oh
Plumbing
yeah.
products. You
Yeah,
see it probably everywhere. It'd be
they're
like
some of my
PIM or American
favorite
Standard.
receptacles to use. Yeah. Yeah,
Yeah,
they've
right.
got a premium toilet over there. Yeah.
Yeah, so they do good. So, but they were located right here in Perrysville, Ohio, which is maybe 10 minutes from where we're at. So they relocated and moved to Mexico for production, which is kind of a bummer. But Joseph came in and took over their facility. That one is over a 500,000 square foot. It's probably 520,000 square foot. So we're running that in adaptive at this point, tracking repair costs, tracking really all the work that we're doing to the building structure and operational costs because it's commercial space at this point that we're leasing out. So you can use it
Yeah.
anywhere. I mean, the focus construction is actually a little harder, which makes it more valuable, I think, because it takes some of that difficulty out. But it's easy to implement and really, in my experience, about any company.
Is it fair? Well, I mean, I think like the application of it is broad, and I think one thing I do want to highlight on here for the listeners is just like really driving home the importance of knowing and tracking cost,
Yep.
whatever type of business it is.
Right.
But even on that point, like when we're talking to builders and we're onboarding them and they're using the product, like it's more important for them to let a product like adaptive take the manual, mundane tediousness out of the equation
Yep.
to then focus on the
Right.
hard stuff.
Right.
Right. Like that's where, to your point, like that's the opportunity is construction
Right.
accounting is so nuanced. There's so much going on, so much cost with so many zeros, as I
Right.
call it.
Right.
Would you rather have the bandwidth and mental capacity to sit down and look at something that has already had the bulk of the bullshit taken care of on it to then really analyze and make a strong decision about what does this cost need to do? Where does it need to go in the business?
Right.
Is that
So,
fair?
yeah. So I don't know if you call it an elephant in the room anymore at this point, but if there was one, it would be people worried about AI automation in general.
Yeah.
And that's a fair point. And I had some of those concerns early on, and still we have no idea where that's going to go, and it is a little bit scary in some ways. But at the end of the day, we know like some of these, it's very basic level stuff like that we're talking. It's not basic from the standpoint of it's still hard to make sure your costs are in the right buckets. But what I mean is it's it's basic from the standpoint of it's not high level processing thinking. So it's taking
Exactly.
away the mundane to allow someone to focus on higher level things. So for us, a big one is credit cards. Okay, credit cards.
Mm-hmm.
When we have a company our size, the amount of transaction volume we have on credit cards is insane. Like it's and every
What's
one of
insane?
just the volume,
How many
just
receive?
entering, yeah, like entering that stuff. So it's a task, like it's major. So then manual entry. Now I've tried importing. We actually had feeds set up with a credit card where we could pull it in. The problem with that is it doesn't recognize jobs. It doesn't know what a job is. It doesn't, so then it's
Right.
like, well, I got to go through every one of those transactions and then I got to assign a job to it. And then hope that it picked the right department on there that it's the right cost, which it doesn't. I figured out it's better to manually enter it. Now with adaptive, we have that process flowing through. It's more of a review process. It's like, is this
Mm-hmm.
right? Not. It's matched to the bank feed or to the credit card feed. Yep, it's good. Cool. Let's move on to the next one. So it's definitely. I mean, I would say in any company, there's hours per week. I mean, probably actually we did a time study. We had an individual that, and I don't know what we would have done. We'd have to hire someone else. It's not eliminating work, but we had an individual that was spending on one of the entities about 28 hours, 28 to 30 hours, up to 32 hours a month, which isn't a ton. It's a small company though. We implement adaptive 1 month later, it was 18 hours. Okay, so
That's insane.
it's almost in half, and that is real. Like that's actual real time. Like that's not made up.
Yeah.
I'm not. It's not an estimate. So that is a real thing. So when you talk about a cost of adaptive, and you talk about what it costs in wages for a person, and the fact that you can utilize that person more effectively, which is not even in the equation because it's a value add. Um,
Hmm.
then there's a lot to gain there. It's not that simple in all companies, I'm sure, and time studies are going to vary across the board based on how fast or efficient somebody is or was. But for us in that company, it was easy because we had one person doing it and we knew what the stuff was. And 1 month later after adaptive, that's where it's at. And it's maintained there. It's about 16, 15 to 18 hours. But I mean, that's a lot, when you talk about percentage wise. I
Totally.
mean, yeah, it's very helpful.
You you mentioned, and that's awesome. That's awesome. I mean, those are the types of stories that you're like, I mean, this is real. And I think for a lot of builders, the skepticism could be like, what I mean, is it actually like I still have to review it, right? Is the concept. It's like you want that review, right? You want
Right.
the critical thinking. But just before I forget, how you mentioned that it was a smaller entity. Like for that going from call it 30 hours a month
It's a half a
to
million
60,
dollar entity. I mean, just for an
half
idea
a
on
million
volume.
dollars. So you and what's the business, if you don't mind me
It's
asking?
that's
Like
the
what is
short term rental real estate stuff. Yeah.
so what's the bill volume look like in receipt volume? Not numbers of finance, but like the quantity units of bills and invoices. What
It's
does that look
not a
like?
ton, but when I say it's not a ton, like I'm comparing it to our large entities. Like to me, it's very minor and small. To someone else, it might be a decent chunk of volume. But I don't know off the top of my head how many bills. I mean, payables might be. It's really not that hard because we're talking about owning real estate, paying utilities, and that type of stuff. But the part that gets a little tricky is we're matching, like we have lodging tax, for example, you got to track. And then we have things like, if we do repair, everything is tracked, whether it's repair work or not, everything gets tracked rather than to a job. Our job in that business would be a property, and the property
Mm-hmm.
um, is then has these utilities, it has these services, it has, and so the income gets tracked to that property, the expenses get tracked to that property as if it were a job. But it's for
Mm-hmm.
us, it would be like if you're looking at a P&L, it'd be property A,
Yeah.
property B, property C, but it's the same idea. And that's why I knew
I
I
mean, are
could
we
get
talking
adaptive
like
to work.
for sure? Are we talking like more than 10 bills a week?
Oh yeah, yeah, probably,
A hun-
probably more like 15 to something like that. Credit card
And then how
wise,
many receipts?
credit card
Yeah.
wise, the time spent though was not only that. It might, yeah, maybe it's a little more than I'm thinking. Maybe it's 15 to 20, and then probably credit card activity, probably 40 to 50 transactions a month, maybe a little more.
A
Um,
month? Okay, but so we're talking like just to be like round numbers, let's go heavy. Let's call it like 30 quantities
mhm,
a month. Call
mhm.
it 10 bills, 20 receipts. And you were spending call it a week, a light week a month on it, cut it down. Like that's pretty
Yeah,
solid.
yep. Yeah, it definitely saves time
That's
because
insane.
especially when we're writing checks. So now in that company we have most everything ACH. So like it takes
Yep.
2 seconds to pay somebody, and they get their payment in 3 to 5 days or whatever. Versus we got to get a check, either print the check, handwrite the check, however you're doing it, and then
Wild.
you get those all signed, and then you got to go through and get the stubs and put them all, stuff them all, and then you got to put postage on it. And so it's not, we're not talking about crazy like expense, but we're talking about like it all adds up and it's all wasted time, really. It doesn't gain the business anything. So that's our simplest, easiest success story. measure anyway for us.
And then you start, like, again, going back to the multiple entities. I mean, that's pretty cool.
Yeah, and for those that don't know, Adaptive has I can switch between companies just like nothing. I mean, it's got, you have company one, you click on it, and then it pulls up your whole list of companies, and then you click on company two, and then you click on company three. And there is a slight suggestion that maybe Sarah's the right person, but it's not quite as easy on the app for the phone, but I think that could get there to where it's a similar drop down type menu.
Yeah.
But on PC, it's very simple, very easy to use, switching back and forth. And let's say you're the one approving bills and you're doing it for multiple entities. You just approve bills on company A, you're done with that. You approve bills on company B. And yeah, it's really, really effective and good. And yeah.
Damn. Well, no, Shayne, I mean, I think this is awesome. I think for the listeners out there, just, I love how we started with like kind of the high level of like what is Shrock and understanding like the multiple components, the importance of tracking cost, understanding from entity to entity what's actually happening, but then even boiling it down into a simplistic, like very reasonable, similar type business with bill volumes and receipt volumes, what it can do. This was awesome, dude. I appreciate you hopping on. I'm excited to get this one out.
So I didn't do this first time around, but I do want to do it this time around. I want to give a shout out to your support team. Well, really everybody at Adaptive, because you're all so easy to work with, but especially your support team, because in today's day and age, unfortunately for you, but unfortunately, it's not hard to separate yourself from bad support. But like, you guys have an awesome support team, specifically Lexi. Like, she's awesome. So
love it.
She's really good. And yeah, everybody's easy to deal with. It's really, really awesome. And the only other thing I wanted to mention is if any listener or anybody watching the video has questions, I'd be happy to steer them. I mean, however, like whether it's cost code stuff or they want to know more about what we're doing specifically in Adaptive, that type of thing, I'd be happy to talk to people. So.
Love it. Love it. What's the, and if we don't want to share it here, we can share it a little bit more controlled, but what's the best way for them to get in touch with you? Would that be like through Instagram? You might, if you want to give your email, you can, or we can just route it through us.
Yeah, so it's Shayne Glass. I have LinkedIn. Probably for this type of thing would make the most sense. It'd be just find me at Shayne Glass. Shrock Premier would be the the entity that I have on there for my profile. But yeah, LinkedIn would work, or Facebook, Instagram. It'd be Shayne Glass. So I don't have a ton of followers. Might not be easy to find, but but yeah. So I'd be happy to talk to people, or my email is fine as well. It'd be Shayne@shrockpremier.com. So yeah, however people want to reach out, I'd be good with. And even you guys, if you run into people that you want, I'd be happy to share success stories. So.
Yeah, no, I think that's huge, Shayne. I think like that's like for all the listeners, if you want to get in contact with Shayne, go to LinkedIn. And for those of you that don't have it, get one. It's good. You'd be shocked at the building community that's on there. But his LinkedIn is Shayne, SHAYNE, Glass, GLASS. Search him there. This was huge, dude. I appreciate you.
Yeah, no, I'm happy to be on here. It's a lot of fun.
Awesome. Well, I'll let you get back to it. As always, it's a pleasure, and we might have to get you back on here shortly.
Okay, sounds good, Reece. Thanks a lot. Appreciate it.
You bet. We'll see you, Shayne.